Episode 4 Financial Statements. Let's take one more question. Trial balance as on 31st December 2017. Opening stock 1000, purchases 2000, sales returns 100, freight 200, office expenses 700, BR 4000, debtors 1000, goodwill 2000, total 11,000. And on credit side, I mean to say credit balances of the trial balance. Capital 2000, sales 4000, purchases, returns 300, notes payable 1000, long-term loan 2000, rent 700, general reserve 1000, total 11,000. And below the trial balance, the items are closing stock 300, rent received in advance 100, bad debts 100. These are the adjustments. So first of all, let's make the formats of trading account, profit and loss account and balance sheet. On the trading account, it's already there. 2 opening stock, 2 purchases minus returns, and on credit side, by sales minus returns and by closing stock. And in the profit and loss account, by gross profit. In the balance sheet, asset side, closing stock, and on liability side, capital plus net profit minus drawings. So first of all, let's take the items of adjustments. Number 1, closing stock 300. You know it very well about the adjustments. If you take up any item out of the trial balance, that always hits twice, one on debit side and one on credit side. So closing stock will go to the credit side of trading account and debit side of balance sheet, means asset side. You know, balance sheet doesn't have any debit or credit side. It always carries debit balances and credit balances. All assets are on the side of debit balances, and on liability side, there are all credit balances. So closing stock finished. Now let's take up the new item, that is rent received in advance, means rent received. So one thing is clear, rent can be expense, rent can be income, but in this situation, rent is income for us because rent is being received. This question is clearly telling rent received in advance. So this is an income and we have received this income 100 in advance. In advance means this income doesn't belong to this year. It means this income belongs to next year, but we have received the money in advance during this year. Let's have a look at the trial balance. How much money we have got as a rent, and trial balance is telling us that rent was 700 on the credit side. It means we have received 700 as rent during this year, and adjustment is telling us that 100 is as an advance. So one thing is clear, that rent of 700, if it is split into 2 parts, that will be 600 and 100. 600 belong to this year, means 2017, and 100 belong to next year, means 2018. You know, when we prepare financial statements, all expenses and incomes are taken to the financial statements which belong to this year. We cannot take any item in the financial statements which belong to last year or which belongs to next year. So one thing is clear, that in financial statements, in the profit and loss account, credit side, the rent will be taken only and only 600 rupees, because only 600 belongs to this year. Anyhow, let's make a journal entry, how the journal entry looks like for rent received in advance. Rent account debit to rent received in advance, 100 rupees. Basically, rent is income, but in this journal entry, rent is being debited. So one thing is clear, rent will be reduced by 100. Anyhow, rent debit 100. It means it will go to the debit side of the financial statements, because rent belongs to profit and loss account. So it will go to the debit side of profit and loss account. And to rent received in advance 100. This is the credit item. It will go to the credit side of balance sheet, means liability side. So rent received in advance on liability side 100. So let's make rent clear first of all. Take the rent from trial balance to the credit side of profit and loss account, because rent is credit, it's a credit item, it will go to the credit side of profit and loss account. So what's happening now? Rent is 700 on the credit side and 100 on debit side. Naturally, rent cannot be taken to the debit side. It doesn't belong to the expenses block. So let's take it from debit to credit side. You know, if any item is taken from the debit side and moved to the credit side, it will be deducted in the inner column. So the final picture of the rent in the financial statements in profit and loss account on credit side will be buy rent 700 minus rent received in advance 100, and in the outer column 600 rupees. So if any income has been received in advance on balance sheet, it will become the liability. Liability means any money we have to pay in future or any services we have to provide in future. So this is a liability. Now rent has been deducted in the inner column. So I repeat it again. Whenever, if there is any income received in advance, on one side it will become the liability, and on another side it will be deducted in the inner column from that income. Next item, bad debts 100. Whenever you find bad debts in the adjustments, for our convenience we can call it new bad debts, because this is a new item in the adjustments out of the trial balance. So we can safely call it new bad debts 100 rupees. You know the meaning of bad debts. Bad debts means the money which cannot be recovered from the debtors. So it's a loss for the company. So it hits twice. Number one, bad debts reduces our profit, and on another side it reduces the value of our debtors. Debtors means the credit customers to whom we have sold the goods and we have to recover money. So the journal entry of bad debts will be, let's call it new bad debts. New bad debts account debit 100 to debtors 100. So new bad debts 100. It means it will go to the debit side of profit and loss account to new bad debts. Before I start the treatment of bad debts, let me make a simple format for you, and that will be quite convenient for you in the further questions. Whenever there is item of bad debts, so you should write down in the inner column 2 old bad debts plus new bad debts plus new provision for bad debts, and draw a line, then it will be total, and then minus old bad debts, leave the space for amount, and then minus new discount on debtors, and the final amount will come to the outer column. So old bad debts means the bad debts which are already in the trial balance. In the trial balance there were no bad debts. So old bad debts 0, new bad debts will be 100. This has been taken from the adjustment, plus new provision for bad debts. New provision for bad debts means the provision for bad debts from the adjustments. In adjustments there is no provision for bad debts. So it will be 0, total 100 minus old provision for bad debts. Old provision for bad debts means the provisions which are already in the trial balance on the credit side. If you look at the trial balance on the credit side, there is no provision for bad debts. It means it was 0. So 100 minus 0, 100. Now minus new discount on debtors or provision for discount on debtors. In adjustments, there is no discount on debtors. All new items belong to adjustments and old items belong to the trial balance. So there was no new discount on debtors, that will be 0. In the outer column, it will be 100. So in this way, we have taken bad debts to the debit side of profit and loss account. Now come to the balance sheet. It will go to the credit side, means liability side. Instead of taking to the liability side, we will take it to the asset side in the inner column, and it will be deducted. So the best format for debtors in the balance sheet is debtors minus new bad debts, then draw a horizontal line, then minus new provision for bad debts, and then minus new discount on debtors. This will be the format presentation in every question for you, and it will become quite convenient for you when I start some advanced question. So debtors 1000 minus new bad debts 100. New bad debts means the bad debts taken from the adjustments. So 1000 minus 100, that will be 900, minus new provision for bad debts. There was no new provision for bad debts in the adjustments. So balance is 900, then minus new discount on debtors. New discount on debtors means discount on debtors taken from the adjustments. There was no discount on debtors in the adjustments. That will be 0. So 900 minus 0, in the outer column it will be 900. So in this way you must remember these formats for profit and loss account and balance sheet. I strongly recommend you should write down in your rough notebook at least 4 or 5 times so that you can remember it. Now let's take more items. Let's take all the items from trial balance to financial statements. Opening stock 1000 on debit side of trading account, purchases 2000 in the inner column trading account, sales terms 100 in the inner column. On the credit side of trading account, freight, these are the direct expenses 200. On the debit side of trading account, office expenses 700. On the debit side of profit and loss account, BR, this is an asset. BR on the debit side of balance sheet, means asset side. Debtors we have already taken when we were doing all the adjustments. Goodwill 2000, it is an asset, intangible asset, and all intangible assets go to asset side of balance sheet. Now capital 2000 in the inner column of the balance sheet. On liability side, sales 4000 in the inner column. On the credit side of trading account, 4000 minus 100, 3900. Purchases returns 300. It will go to the not credit side, it will be taken to the debit side in the inner column of the trading account. Minus returns 300. So 2000 minus 300 in the outer column, it will be 1700. Notes payable 1000. Notes payable means bills payable, bills of exchange payable or promissory notes payable. Liability, this is current liability 1000, it will come to the liability side of the balance sheet. Long term loans 2000. This is long term liability, it will go to the credit side of balance sheet, means liability side. Rent we have already taken when we were doing the adjustments. General reserve 1000, it will go to the credit side of balance sheet, means liability side. General reserve means the profit made by the firm, but it's not yet transferred to the capital, or it's not yet added to the capital. So in this way, the trading account, the total on both sides will be 4200 to gross profit 1300. This gross profit will go to the credit side of profit and loss account 1300. So total of profit and loss account on both sides will be 1900, and to net profit, this is the balancing figure on the debit side of profit and loss account 1100. Let's move to the balance sheet. Capital 2000 plus net profit 1100 minus drawing 0, and in the outer column 3100, and the total on both sides 7200. In this way the question has been completed. Let me repeat again. If there is any income received in advance, number 1, it becomes a liability for the firm, so it goes to the liability side of the balance sheet, and number 2, it is deducted in that income on the credit side of profit and loss account. And if there are bad debts in the trial balance, they will be called old bad debts. If there is bad debts in the adjustments, that will be called new bad debts. And whenever there are new bad debts it will go to the debit side of profit and loss account. And secondly, it will reduce the value of debtors in the balance sheet on asset side. And again, I strongly recommend whenever there is bad debts or provision for bad debts or discount on debtors, you should write down the full format on the debit side of profit and loss account and the full format on the asset side of balance sheet. And what is that format? To old bad debts plus new bad debts plus new provision for bad debts minus old provision for bad debts minus new discount on debtors. In the same way, on balance sheet, it should be debtors minus new bad debts minus new provision for bad debts minus new discount on debtors. So if you write down the format in advance, it will become quite easy to handle this typical adjustments.